Hello friends, myself Praveen Kumar. I am from BCA department second year. Today I am going to talk about introduction to accounting transactions. We can go to the presentation one by one. Introduction to accounting transaction. What is accounting transaction? Transaction means any event which changes the position or financial position of the organization. There is different organization in the world like schools and colleges and universities and officers. For in offices they are used for salaries for the employees, and the schools they are used for university fees. They are given simple example: purchase of coat for 5 lakh rupees. In this event there is a change monetary means money, cash decreases and financial position the asset increases. In the below they had given transaction as a simple formula as transaction is equal to change in monetary position or change in financial position or both. So you had seen here accounting transaction is giving as item to him, and he is giving money to as for the labor. Change in monetary position means increase or decrease in a cash or bank balance. Change in financial means increase or decrease in assets of liabilities or owner's capital. Capital means cash. Change in position or owner's special capital will increase when there is a income, and it will decrease when there is an expense. This means this line explains that owner's capital means owner's cash will increase when there is an income, and it will decrease when there is an expense. Exactly correct. This line explains that when there is an expense, he will become as he will be losses in this business. Next, types of transaction. Cash transaction. Let's see types of transaction one by one. Cash transaction means it is a transaction where the value of the transaction is settled immediately. For example, sale of good for cash, rent paid, salaries paid will come under the cash transaction. Next, credit transaction. Credit transaction means it is a transaction where the value of the transaction is not settled immediately. Where in the cash transaction is settled immediately, where in credit transaction is not settled immediately, but it is postponed to some futures. For example, purchase of goods on credit from Salim, sale of goods on credit to Arun. So he has purchase of goods is on credit from Salim. So in future he will pay. So go for the goods on credit to Arun. Next type of transaction is barter transaction. There are two types of in barter. There are two types of transaction: complete barter transaction, partial barter transaction. In barter transaction there are two types. In that, complete barter transaction means it is a transaction where the value of the transaction is not settled in cash but the some other items. Example, exchange of items. For example, sold furniture in exchange of machinery. Such type of transaction is very rare nowadays. Yes, is exactly correct. In the this statement explains that in the place of sold furniture in exchange of a machine, such type of transaction is very rare nowadays. We can exchange, but they will give if the TV value is 12,000, they will give only 6,000. Next, partial barter transaction. It is a transaction where the value of the transaction is not only in cash but the other items. For example, selling new TV 20,000 in exchange with old TV at an exchange of 15,000. This statement explains that uh, for example, she explains that for new TV worth 20,000 in exchange of old TV. So he had brought us 20,000 in exchange of old TV and exchange of 15,000. So you will be lost 15,000. Next is paper transaction. This is fourth one as transaction. Paper transaction. It is a transaction where the monetary position will not be affected for financial position will be affected. For example, will be affected. Let's see the problem. State whether the following events are transaction or not. Purchase goods from Raghu 15,000. 15,000. Let's see the problem. Purchase. See, this is the event. Purchase goods from Raghu 15,000. Cash transaction. Here purchase goods from Raghu because 15,000 means cash transaction. Changes in monetary means money in and financial position, increase in stock and decrease in cash monetary. Yes, exactly, you will be decreasing cash monetary position. Next, receive the goods delivered by Raghu on next date means uh, receive goods delivered by Raghu and on next day he will receive the is not is not a cash, so that it will get a not a transaction because he is not receiving a money. So no changes. NIL stock, goods means stocks, so in decrease NIL. Next, sold goods to Mohan and account 5,000, credit transaction because it is a credit transaction. uh, Sold goods means credit transaction means yes, it is where the value of the transaction is not settled immediately. So sold goods means to Mohan on account 5,000, credit transaction. Changes in financial position, debitor means financial position, which will go debit. Uh, Debit, it is a real account. Is simple, we say debit what comes in. Next, stock, financial position. Sent email to Mohan for acknowledgement. It is not a transaction, monetary or financial position. So this is the small example for the transaction. Next is under this there is a simple topic as recording of accounting transaction, single entry system and double entry system. A single entry system, it is a system where only one aspect of each and every transaction, debit or credit, are recorded. It does not record all the transaction or recorded. It is incomplete system of bookkeeping. There are different types of single entry system, pure single entry system, uh, and simple entry system. In this, they separated single entry system. Pure single entry it records only the personal accounts. So example take where we are the students, so we have maintained the personal accounts or father's account or mother's account. So next is simple single entry system means it records the personal accounts of debitors and debitors. Next is quasi single entry system. It records not only the personal accounts of debitors or creditors but also the cash book or subsidy books. In the future we have this cash book and subsidiary books such as purchase book, sales book, purchase returns book, sales return book, etc. This is different topics. Not In this statement, it explains that quasi single entry system means it records not only the personal account of debitors or the creditors but also the cash book or subsidy book. It will combines all this in this system. Double entry system. What is future? What is it? What it has the features of double entry system. It records all the transaction, whether a personal, impersonal accounts or real or nominal account. There has the different rules for real and nominal account. Rules for as per the English approach, real account is what comes in debit, what comes in credit, what goes out. In personal, whereas in personal debit the receiver, credit the giver. It is universally accepted accounting concept based on dual aspect concept. Dual means double entry system. There must be two parties to transaction. One party is receiving the benefit, other party is giving the benefit. Advantages of a double entry system. Since both aspects of each and every transaction are recorded, it helps in checking the eliminating errors involved in the transaction. It is scientific, reliable, and satisfactory, uh, and accurate system of recording or bookkeeping. It helps in preparation of trial balance and checks the arithmetical accuracy of various ledger books. This system is reliable and is accepted by the tax authorities court as evidence. It has double entry system as advantages as it has scientific, reliable, and satisfactory. It should be satisfactory and accurate. Accurate means speed or recording or bookkeeping. Disadvantage double, it is difficult and complicated. Yes, it is difficult and complicated. Why? Because they should enter in two ways. It involves maintenance of many of accounts which prove costlier. Certain types of errors cannot be located easily. So thank you. Thank you friends for watching this video, and it will be helpful for other people also. Once again, thank you friends.